What's up, everybody? Welcome back to Trading Wars. Thanks for joining me today. Today, my friends, just another great day. We had a gap and go textbook style today, my friends. We're able to absolutely destroy it today. I'm going to be breaking it all down for you step by step. So if you're ready, my friends, let's step into the war zone. First and foremost, who do we have in the building? Any Trading Wars Army members? Becky, Todd, Alfonso, LC, STK, Wayne, Caladil, Andy, Jesse, Gus, Reggie, Benny, One Story a Day, Thomas, Steven, welcome, welcome. One Story a Day, Trading Wars Army, good to see you. All right, guys. All right, so guys, let's get right into this. Today was a textbook gap and go, and I'm going to walk you through how you can take advantage of that, as well as certain algorithm styles of trading that I really want to share with you. Okay, so the first thing I'm going to do here is I'm going to go ahead and I'm going to hit the replay. Okay, so we're going to replay the day, and the first thing we want to do is go ahead and draw the previous day's high. Okay, I'm going to put that in white, and I'm going to draw the previous day's low right there. All right, so before we get into this, how many of you were able to bank with me today? How many of you did well? Hit me with a 1 if you made money. Hit me with a 2 if you lost money. And honestly, guys, if you've been following along with the channel, and whether you're in the army or not, we talk about these plays every single day. So hopefully we see a lot of ones in there, hopefully. All right. So the first thing that what I like to do is start off on the 3-minute chart. Okay. And remember last night when we were looking at the futures market, we noticed that we made a new high in the futures market. So we had a feeling that today we could possibly gap up. Okay. So first candle comes in right there. Boom. We are gapping up above the previous day's high. All right. So overall, the sentiment in the market lately has been, very bearish. There's been a lot of negativity, negative news, a lot of fear. But when we open like this, guys, when we open with this big of a gap, and look at this candle, look how powerful this candle is off the open. Who do you think is trapped right at the open? Hit me with a 2 for the bears or a 3 for the bulls. What do you guys think? Who's trapped? Who's in danger of this candle? Well, anyone that shorted into the close yesterday, or anyone that held overnight, right at the open, they're in danger. Okay, so that's why this box right here presents volatility, because there is a potential stop run for anyone that shorted. So that's why I love to use the first strategy I love to use is the opening range breakout. So the opening range breakout, all we're doing here, guys, if I could put a box around this first 3-minute bar, we're just trying to take the break of this box. That's it. So if it breaks the high, we want to go long. If it breaks the low, we want to go short. That's all we're doing with the opening range breakout. So let me go ahead and walk you through my live commentary today. So you can see right here, going to try an orb this morning on the 3-minute, keep the size small. Then we go right into the fibs. So right here at 9:33, we got long. We hit our first target, then our next target, and target 2 crush, who's banking with me. Pretty much, guys, within 6 minutes today, we were able to get 2 targets and leave a runner on. So let me just show you how we do that. So I'm going to take a Fibonacci and put it on the candle itself. And you'll see the first candle came in and it blew right through. Okay, so it broke the high and it popped right up. And right here, guys, if you're watching the candles in real time, if you're trading with us live in real time, you would have noticed a lot. And just from watching this, we could tell that there was an algorithm in the market, in the open, a bullish algorithm, because the candles were moving so fast. This bullish pop right here, guys, it popped up, it came back down, it popped up, it came back down, but it never, you could see this wick right here, it never put this candle in danger. We came back down to the high a few times to retest, and then we started to squeeze. So the first target goes on the 272, the second target on the 50% extension. That right there, guys, that gain is about 5 points, and 5 points on one contract is $250. So what you can do right here, just add ES. So we just add ES right here as a new pane. Sorry, not a new pane. That's wrong. Hold on one sec. So let me get rid of this right here. So you can click this, add ES, new price scale. All right. So we could look at the points that we went for. Okay. So you see right around here, entry about 37.29.50, and by the 50% extension, 37.40s. And so if you just take about half of that, that's an easy 5 points secured. So one contract, $250. From there, what I did next was get the stop loss to break even on my runners. And then from there, guys, we just started to squeeze. And we started squeezing like there was no tomorrow. And this is because there was a lot of trap shorts. a lot of fear, and the market loves to punish people that will not change. If you do not adapt to the price action, you will get destroyed time and time again. The market will do that because in the market, you can only thing that is true is price action. And if we look at this, guys, we could see there was bullish price action. Here's the previous day's high. We gapped up above it. First 3-minute candle, extremely bullish. At that point, you have no choice but to go ahead and change your mentality. If you're a perma bear, whatever it is, that's why I love to trade price action only. Okay, so hit me with a 5 if that makes sense. So that's the first play we took, was the opening range breakout. One of my go-to plays when we expect momentum. And one thing with the opening range breakout is I would prefer to use futures contracts, because a lot of the times in the morning, if you're using calls, especially on a gap up, the premiums are going to be high. So what you want to do instead is use futures, because there's no option premiums priced in. It's just straight up price action at certain price points. Okay, so from there, we had one more trade on the day, and this is very important. Okay, and I'm gonna go ahead and draw this out. So if I take the Fibonacci from the low to the high right here, I'm gonna get rid of everything, and I'm just gonna leave the 618 on, like I've been showing you guys lately. Okay, so we'll go ahead, we'll get rid of everything here, and we're just going to leave the 618. And I've been training you guys over the past few weeks just to focus on the 618. Don't focus on anything else right now. When you're starting off, you don't want to get confused. You want to focus on one particular style. And that's why I want you guys to focus on the 618. So we go ahead here, and this is the mistake that a lot of rookies will do, is they will buy calls at the highs because they get FOMO. They're going to start to buy premium over here into these highs. And you see how we go sideways for about a half an hour. This move right here will actually kill your premiums. So what that means is, even if it continues to go a little bit higher like this, you probably will still be losing money. Okay, you'll probably still be losing money because you're paying a extremely high price for the calls, for the premiums. Instead, what you want to do, my friend, is wait for that 618. You want to wait for that pullback. And generally on a gap and go day, you're going to get some kind of pullback, because there are institutions that are waiting as well, and they're not going to make the mistake of buying calls in new highs like a lot of the rookies do. Okay, so hit me with the 5. Does that make sense about does that make sense about buying premiums at the highs? This is why we don't do this. So you either be aggressive, you take the opening range breakout in the morning, or if not, you wait for that pullback. You wait for that pullback, because if you buy calls here and they're wrong, you could lose so much money, you will blow up your account. And that's what I don't want you to do. This is when all the sweeper alerts come in, and all the patterns and the breakouts. This is when they come in up here. This is not where you want to be. Okay, contrary to what you've probably been learning, you want to be down here. You want to get a 61.8% discount. Okay, so let's go ahead here. So finally, we come all the way down right here, guys. It took us a little bit of time. This came all the way in at 120, and we finally got the pullback here. And what's really good about this setup is that you waited for 120, basically halfway through the day, a little bit more than halfway through the day, where the premiums will be getting decayed with this sideways movement. So now you're getting a deal. And what pattern is this, guys? Help me. I want to know if you guys have been paying attention. What pattern is this? What pattern is this where we have this candle? What pattern is this over here? So not only are we on the 618, but we have a candlestick pattern. So do you guys know what pattern that is? This pattern here, guys, is the waterfall. So notice on the way down, none of the highs of these candles were broken until we get to this green candle. Watch the next candle right here. Boom, we break the high. So that's what we call a waterfall price action. Extremely powerful. And what you can do right there is, if you don't want to take the full risk of risking the low of the day, you can just come and risk this bar. Okay, you can come and risk that bar just like that. All right. And then I fast forward here. Boom. Excellent, excellent day, guys. Clean. Okay. So this pullback to this high was about 30 points. So that's $1,500 a contract. Pretty good. And the 375 calls went for about 55% from here into the close. Okay. So excellent, excellent trading day. So we had only 2 trades today. We're on a really big winning streak now for this week. And the only thing that I'm worried about now is protecting profits. I will not give those profits back by the end of the week. And just to show you the fib, so here was us drawing up the fibs in the morning. So you could see we never got a real good pullback until the afternoon. And that's where we drew the afternoon leg right here. And then you could see us coming straight into the 618, and we were able to crush that as a team. All right, guys. All right. So go ahead and hit me with an 11 if that makes sense. All right. So what I'm going to do is I want to talk a little bit about Microsoft, but just want to let you guys know before the time runs out here. So we are continuing to do the 1-year anniversary sale. If you purchase any one of my 3 books, instead of getting 1 month for free, you will get 2 months for free. You'll get 60 days live in the Discord with us. That is the best deal I've ever done, guys. So if you're on the fence right now and you want to grab a copy of the book, I recommend you grab it now. You'll be able to get the indicators, the premium ones with alerts for life. Okay, that'll be my advanced indicators, as well as, guys, 60 days in the Discord with the community. So that will be on until midnight. Okay, so after midnight, that sale will be gone, and I don't think I'll be bringing it back for a long time. So consider that if you're interested. So now I want to talk about Microsoft. So I'm not sure if you guys have been following along, but I did mention that I wanted to get Microsoft for a long-term play. So hit me with a 3. Do you guys remember that when I was talking about Microsoft, how I want to get Microsoft for a long-term play? So let me just make sure that we're on the same page. So what I did here is in the swing trade channel, I went ahead here and I gave some plays on Microsoft. So we started buying Microsoft at 240. This was back in September 26th. And I personally added one more time right in the 235-ish area. And the reason is because of this 50% retracement. So I have the Fibonacci drawn up. This is the weekly chart on Microsoft. Okay, so we have this big push up from the COVID lows, and we came back to the 50% retracement. And that's why I started to build this position. Okay, so I've been sharing my ads in the Discord, and right now we're at 248.88. So pretty much up about $9 or $10 a share, depending on where you added. But really, really nice start to this longer term play on Microsoft. And I'm just hoping here that maybe we caught the bottom of the rest of this year, and then going into 2023, maybe we got the long-term bottom, because we are looking at the weekly. And if we look at the monthly, guys, we're starting to build an inside bar on the monthly. So potentially this could be an inside month. What would be very powerful on Microsoft is if we go ahead and break the September high, so 266, 267, if we can come and break that by the end of this month, that'll be an extremely bullish sign. So I just wanted to give you guys an update on that. All right. Last thing right here is I have some scans for the blue raindrops that I'm going to post right after this. And as always, guys, if you are a Trendspider customer and you want to get my scanners and my setup, just email hello@trendspider.com or DM anybody in Trendspider and they will set you up so you can get my scans and my setups. Or you could use code TWZ30 for 30% off at checkout. Okay, so just waiting here for this to load, taking a little bit of time here. But yeah, so there's no inside bars or anything really standing out right now, because obviously we had a big gap up today, but we did have some candles on some of these charts here that were basically showing not volatility, but equilibrium with volume. Okay, so a few of them here. One that I'm really looking for tomorrow is Visa. So I'm going to go ahead and change this to the raindrop. You know, back when the market was really bullish, I used to make a lot of money on Visa. So you could see the last blue raindrop we had here was a nice push down. Then we're looking at this one to see either if we break below the low or the high to see if we can get a breakout there. So Visa, Etsy is another one that I used to trade a lot. So a lot of these names that have been kind of sleeping are coming back online. You can see the last blue raindrop on Etsy was exceptionally well. Netflix, guys, another big one right here. And, you know, the raindrops on Netflix have been pretty good. So I have all of those ready to go, and I'm going to post those in a bit. So continue to just check that out on the Twitter and on the Discord. Otherwise than that, I want to thank you very much for your time. As just a very clean day, 2 trades, 2 winners. Don't need to overcomplicate things, and we just need to continue to focus and earn profits going into tomorrow. Please, guys, comment, like, subscribe if you like the content. I pretty much give you my full strategy up front, guys. I have nothing to hide. So I really appreciate if you guys could show me some love, trying to be different in this community and try to be transparent with everybody. All right. So drop a like and a comment. You'll have a chance to win the giveaways that we do every single Sunday. And as always, the deal for the books are going on until midnight if you're interested. Okay. Thank you so much. Let me just answer a few questions here. Rich, which of your books you recommend for newbies? So the S&P 500 Options Mastery book is a good place to start. If you trade SPY, this is where you want to start. I talk about futures. I talk about a lot of things SPY specific. If you trade stocks, then I would focus on this. the stock options mastery book, and then the Fibonacci book is a general Fibonacci book for everything. So it is probably a little bit more complicated than the other two books, but it is, you know, the big money maker that we have. So, you know, for you guys as a complete newbie, you might not want to start here, but I've honestly written these books from the very, very beginning. You could see impulsive legs all the way down to complicated strategies. So I think that I've written them in a way that anyone can understand. I try to be very, very straightforward and very, very direct. All right. So what platform using? Interactive Brokers. The links are in the description. And that's it. Thank you. I'll see you tomorrow. We'll keep it going. Let's see if we can continue to have this winning streak, and maybe this might be the best week of the year. Let's see. So far, so good. All right, guys. Have a great night.